So here's where we currently are on a kind of a seasonal basis. So these are seasonal continuation patterns, and this is like the June S&P E-mini contract. So you can see we're currently seasonally, we're getting the very weak part. The second half, the mid to second half of February is seasonally very weak. All right, so you can see here, this is 5 years, 15 is the black, and 20, and the kind of magenta's 20, 27 years. But here over the last 5 years, when we get to around right here where we are, seasonally we get a very weak part of the market, right, with the potential for a pretty big move, okay? And then we tend to get a good seasonal low about middle part of March, and then we get a pretty decent, pop back to the upside. So currently, be aware of that. Seasonally, we're in a very weak period here, so I always like to know that. And if we're like down here, we've got the seasonality strength to our back. So these trades, we have better trading trades. Remember, if you were, trading back here in November, December, we had a pretty nice run to the upside, and a lot of that also was helped by seasonality. So now we're not going to have that seasonality strength to the market. All right, so it's going to make things even more difficult. And here's the NASDAQ. It's pretty much the same thing. We tend to get a seasonal swing high right here, the 15th. So you can see it's been pretty consistent, very, very strong seasonal pattern. Now, the 15 year is kind of interesting. It tends to trend up. But what this tells you is that the NASDAQ has been a little bit stronger than the S&P, but still, the higher probability is that seasonal push to the downside. So that's a look there. So I wanted to kind of point that out.